Welcome back to Riyadh Earnings Explained. I'm thrilled you're here today because we're diving straight into our latest explainer on Salesforce's absolute monster of a quarter, their Q1 FY27 financial results. If you follow enterprise software, you already know Salesforce has been making this massive strategic pivot toward artificial intelligence. Today, we're popping the hood to see exactly how that pivot is showing up in their financials. We're going to focus heavily on the key metrics that matter most to us here: revenue, revenue growth, and net income, just to see if the world's #1 CRM is actually translating all that AI hype into bottom-line reality. Let's get into it.
Here's a quick look at our agenda for this explainer. We'll start with the Q1 financial headline, break down the revenue and growth, check out their Agentic AI engine, dive into cash flow and shareholder returns, and wrap up with their FY27 guidance and outlook.
We're kicking things off with a massive hook, a 13% year-over-year revenue growth. Look, in the world of mega-cap enterprise software, maintaining double-digit top-line growth is basically the ultimate test of durability. This 13% figure completely sets the tone for an outstanding quarter and proves their core growth engine is just firing on all cylinders.
Section 1, the Q1 financial headline. Salesforce delivered a staggering $11.1 billion in first quarter revenue. That represents the 13% year-over-year growth we just talked about, or 12% if you're looking at constant currency. Now, for our financial analysis, it's worth noting this does include a $444 million revenue contribution from their recent Informatica integration. But hey, even factoring that in, generating over $11 billion in a single quarter is a monumental achievement. It really highlights their entrenched position in the enterprise ecosystem.
Moving down the income statement to the profitability side, they posted a Q1 GAAP diluted net income per share of $2.42. For all of you Riyadh Earnings Explained viewers who track net income super closely, listen to this. That GAAP EPS is up an incredible 52% year over year. Think about that. They aren't just growing revenue, they're scaling profitability significantly faster than their top line. That is exactly the kind of operating leverage we all want to see. To understand their true operational profitability, we've got to look at the difference between their GAAP and non-GAAP earnings per share. So while GAAP EPS sat at $2.42, their non-GAAP diluted net income per share, which strips out stuff like stock-based comp and amortization, hit $3.88. The big takeaway here? Both metrics are showing massive, roughly 50% year-over-year growth. It proves their profitability story is incredibly robust, no matter which accounting standard you prefer to use.
Section 2, revenue breakdown and growth.
Salesforce recently evolved its product architecture and revenue reporting to really reflect its focus on the agentic enterprise. When you look at their $10.6 billion in subscription and support revenue, you can clearly see the dominance of Agentforce apps, which makes up the lion's share at $6.91 billion. This bucket includes Agentforce Sales, Service, Marketing, Commerce, and Slack. Meanwhile, Data 360, Headless Platform, and other categories brought in a very healthy $3.68 billion. So the core apps are absolutely still the primary revenue engine, but that data and platform layer is massive all on its own. What really stands out globally is the remarkable consistency. We're talking about highly consistent, double-digit constant currency growth rates across all major geographies. You've got 11% in the Americas, 12% in Europe, and 12% in the Asia-Pacific region. This isn't just one region carrying the rest of the business, this is synchronized global execution, which honestly is a pretty rare feat in today's choppy macro environment.
Section 3, the Agentic AI engine.
CEO Mark Benioff made his stance crystal clear. And if you tuned in to the earnings call, you know the guy absolutely loves the word agentic right now. He literally said agentic AI is the biggest growth opportunity for our customers and for Salesforce. He also proudly claimed their spot as the #1 agentic CRM. Look, this isn't just some marketing buzzword for them anymore. It is the undisputed catalyst for the company's future, and basically the core thesis for investing in Salesforce today. With Agentforce now powering every single customer 360 application, Salesforce is actively helping tens of thousands of businesses across every industry transform into what they're calling agentic enterprises. It's all about moving way beyond just basic data storage or simple workflows. They are integrating humans, autonomous agents, apps, and data on one unified platform to drive some pretty unprecedented efficiency.
And here is where the rubber really meets the road financially. These metrics are totally mind-blowing. They aren't just talking about AI, they are monetizing it rapidly. Agentforce and Data 360 annual recurring revenue, or ARR, reached nearly $3.4 billion, up over 200% year over year. Agentforce ARR specifically just crossed the billion-dollar mark, hitting $1.2 billion, up 205%. Plus, they've delivered 3.8 billion agentic work units to date, a metric that's growing 111% sequentially. Add in the fact that their Slack model context protocol surpassed 1 million active users in just 6 weeks, and you can see this is exponential AI adoption translating directly into high-margin subscription revenue.
Moving on to Section 4, Cash Flow and Shareholder Returns. Despite some heavy investments in AI and infrastructure, the underlying CRM business remains an absolute cash machine. In Q1, Salesforce generated a staggering $6.7 billion in operating cash flow and $6.6 billion in free cash flow. That free cash flow figure is up 4% year over year. Let's be real. When a company generates over $6.5 billion of free cash in a single 90-day period, they have ultimate flexibility in how they choose to reward their investors. And reward them, they certainly did. They executed one of the most aggressive capital return strategies in the entire software industry. We're talking a total of $27.5 billion returned to shareholders in Q1 alone. This was largely driven by $27.1 billion in share repurchases, which includes kicking off their largest ever $25 billion accelerated share repurchase program. Because of this massive buyback, their Q1 diluted share count is down a whopping 10% year over year. And they also paid out $365 million in dividends. By shrinking that share float by 10%, they're essentially artificially boosting future earnings per share, which makes the stock highly attractive from a valuation perspective.
Finally, Section 5, FY27 Guidance and Outlook.
So the big question for analysts right now is whether all this agentic AI momentum can actually carry them to their previously stated long-term goals. Specifically, management has this profitable growth framework targeting over $63 billion in revenue by fiscal year 2030. Let's see what the immediate future holds to keep them on that trajectory. Management remains highly confident. For the upcoming Q2, they're guiding for revenue somewhere between $11.27 and $11.35 billion, representing 10 to 11% growth. Then, looking at the full year FY27, they actually raised the midpoint of their guidance. They're now expecting up to $46.2 billion in revenue, which is an 11% year-over-year growth rate. They also project full-year non-GAAP earnings per share to land between $14.06 and $14.12. All while maintaining a remarkably healthy 34.3% non-GAAP operating margin. They're basically forecasting organic revenue acceleration in the second half of the year, driven precisely by this massive new Agentforce and Data 360 product cycle. As we wrap up this explainer for RIA Earnings Explained, I want to leave you with this provocative thought. We are looking at a company combining $3.4 billion in rapidly scaling AI and data ARR, over 10% structural revenue growth, 50% bottom-line income growth, and a capital return program that literally just wiped out 10% of its outstanding shares. With agentic AI scaling this incredibly fast across the enterprise, how much bigger can Salesforce grow by FY30? Let me know your thoughts down in the comments. Thanks so much for joining me on this deep dive into the numbers, and as always, keep analyzing those earnings.